So, guys, I would like to give you all a bit of an introduction about Vaibhav. So, Vaibhav is the founder and chief investment officer at Tezi Mandi. He has over a decade of experience in stock picking and generating index beating returns. Under the mentorship of ace investor Mr. Ramdev Agarwalji, Vaibhav has developed his distinct investment philosophy. His style involves combining a portfolio of tactical bets with long-term winners to generate optimum returns. Vaibhav holds a Bachelor's of Computer Science from University of Pennsylvania and an MBA from London Business School.
Yeah, uh, yeah. Hi, Mishika. Yeah, thanks for the introduction. Uh,
Yes, I think Vaibhav, we can proceed to the question and answer round with you.
yeah,
So, Vaibhav, what's your investing strategy and how do you relate it with the classic value investing thought process?
yeah. So, see, my investing philosophy. So, there are broadly two components to the portfolio. One is the buying side, and one is the disciplined sort of rebalancing. So, on the buying side, usually 70 to 80% of the portfolio is long term winners, and about 20 to 25% is tactical bets. So in the long term winners, we look at companies that have a growth track record of 1, 3, 5 years. They also should have good growth runway ahead of them, good capital allocation policies, good corporate governance, and yeah, I mean I think like a great industry opportunity and great competitive advantage. And on the tactical bet side, so for long term winners, the outlook is like 15 to 18 months. And for tactical bets, we look at companies that have we look at opportunities from a 3 to 6 month perspective. And opportunities could be for various reasons. I mean, if there is some, like super externality because of which, profits are exploding in some industry, or it could be that there is sector consolidation happening in a specific sector.
Right.
So various opportunities like that from a 3 to 6 month perspective, and then on the disciplined rebalancing side, like just as buying is important, even sort of selling and rebalancing is equally important. So the initial thesis with which we buy the stock, if that sort of plays out, then we may choose to exit, and also oftentimes, like when there's a change in the company's capital allocation policy, or some large competitor comes in and spoils the industry profitability, or there is like just some markets are overheated, or there's some global externality which is out of our control, and at that point we may sort of choose to exit, or maybe sit, like have a certain component of the portfolio in cash or liquid ETFs.
Okay, that sounds really interesting, Vaibhav. So, Vaibhav, 2021 has been a great year. Not only a great year, but it's also been a bumper and a grand year in that way. So, in whatever way you look at it, investors have made pots of money in 2021, especially in the equity market. So, what's your view for 2022? Like, is this party here to continue? Are there going to be some serious sector rotations or some mega trends which will continue to flourish in 2022 as well?
Yeah, so I think, see, I mean, I personally think that India is sort of coming out of a down cycle and entering into sort of a structural upcycle, as far as the economy and corporate earnings is concerned. And markets follow corporate earnings and the economy. So I think that, yeah, I mean, I think that we are in sort of a structural bull run. I mean, obviously, there is a lot of macro noise around Omicron and Fed tapering and all those sort of things. But I think market should continue to do well. But having said that, I don't think it'll be as easy as it was to make money say in the last year and a half, because the low hanging fruits have now sort of, to some extent, been priced in. So I think going forward, it'll be like a very sector specific or very stock specific opportunity that one would have to sort of look at. So I think going forward, you'll have to sort of do more deep dive into the companies that you're sort of investing in.
Right. Since October 2021, in the last 40 out of 48 sessions, FIIs have been net sellers in Indian equities. So, can you give your view on the same and how? can it affect the markets going forward?
Right. So I think FIs have been selling because of again the risk of Omicron and also the Fed tapering. So there's generally been a risk of strategy for emerging markets. So India has sort of been a victim of that. But having said that, I think globally, if you look at sort of any strategist or even just from an economic growth point of view, India is one of the few large economies that has this kind of sort of growth left ahead. In almost every sector, there is under penetration when you compare it to say China or to the US or maybe even some of the other larger countries. So point is that there is a lot that and India is also coming out of a sort of a down cycle and going into an up cycle, and there are ingredients for sort of capex growth and all of that. So I think that if investors sort of want to make want to participate in this economic growth and in the the price appreciation of capital markets, they will have to be in India. India will be a market that sort of will be like just like China was for the last 10 to 15 years. India will be a relevant market for the next, I think, 5-10 years at least. So at some point FIs will come. Now it's difficult to pinpoint when they will sort of come in, but I think that at some point they'll definitely sort of come in. But we shouldn't be too worried by sort of the near term fluctuations.
Correct. So Weber, we've also noticed one thing that many believes that central banks may not increase the interest rates in a hurry and will continue to support growth in that sense, as opposed to be inflation warriors. But sooner or later, it can have a repercussion on the equity markets as well. So at a time like this, do you think one needs to reduce exposure from equities as an asset class or no?
Right. So you're referring to the Fed tapering, right?
Yeah, right.
Yeah. Yeah, I think Fed tapering. I think this narrative has been there for a while, and I think globally markets are sort of following this event like almost by the millisecond. So I think markets are pricing in sort of what is expected. So I think it's not so straightforward because bond yields are yet not sort of increasing at the pace at which sort of people are expecting. So and also, I think there are some central bank governors who think that inflation might sort of be a transient thing and it could sort of come off in the middle of next year. So it's not very clear as to how accelerated this Fed tapering will be. Number one, and number two is even if it does happen, I think it's an event that is being priced in sort of very quickly. And yes, it might have some impact in the near term, but I think that also provides you opportunities to sort of buy companies that you think might be relevant from a 3 to 5 year perspective.
So basically, we can use these opportunities to build our long-term portfolios.
Yeah. You should in fact look at it that way. You should look at it as a buying opportunity because if something is worth 100 rupees and it's becoming worth 60 rupees or 70 rupees because of something that is completely sort of unrelated, or it is sort of doesn't affect you on a day-to-day basis, then I think you should sort of buy it, right?
Right. So Weber, from Jefferies to Credit Suisse and from CLSA to Morgan Stanley, all brokerage houses are saying that the earnings would be strong, but somehow the markets are trading above their historical averages. So the scope of making double-digit returns is not impossible, but is it going to be a tough task?
I think valuations. I think we have to look at it in a context. One is that the denominator right now is sort of deflated because you're sitting on sort of deflated earnings, right? So whether you look at market cap to GDP, whether you look at price to earnings, there's been a big aberration. So I think one those numbers are not fully reflective. But like let's say even if you take from an FY23 or FY24 perspective, I think going forward, Indian companies are going to create a lot of earnings and a lot of value, and so a lot of these statistics don't necessarily capture that, because ultimately money is made by companies creating value. The statistics might just sort of indicate something, but I think right now it may not be the best way, because you have to take like a 5-7 year context in view. And so I think that yes, double digit returns now, again, like at a market level, it may be tough to say what sort of returns you'll get in 22, but I think again there are specific opportunities you can look at. But what I think is that the Nifty companies, like the growth has been about 4% in the last 5-6 years. Next 5 years, this number could easily be at about 15% annually. So with such a large earnings growth happening, I think you could make at least mid-teen sort of market appreciation should sort of happen for the next 3 to 5 years.
Right. So, Vaibhav, let's make this a bit interesting now. Let's divide the market in three parts for you. That is a buy and a sell and a hold basket. So, based on earnings potential and the underlying valuations, what comes under a buy, a sell, and a hold for you? We are talking in context of sectors.
Right. So I think from a buy point of view, right now I would look at private sector banks, IT services companies, certain companies with, like in the hospitals space, and also some companies that sort of face the infrastructure or capex sector. I think from a sell perspective, I think while there is a lot of excitement around the recent tech IPOs, I would sort of stay away from them. But because they're great companies, but as investments, I think they're pricing in more than what they're likely to sort of deliver. So I think I would stay away from them. In terms of some of the other sectors, like just the other, then there are a lot of other, like, sort of commodity sectors, I think, which again, they've had a massive run in 2021. So I think that's one sector you have to be very careful about, because those cycles could be very sharp. So I would sort of be careful of that. And in terms of hold, I think hold is a tough one, because it depends on which one you already have, right?
Right.
So when you say hold, could you maybe clarify what you would like?
In general, like if suppose I'm holding commodity stocks, or if I'm holding textile stocks, if I'm holding banks, so what's your view? Like, are these hold candidates yet, or they have rallied quite a bit and we should look at profit booking also?
I think you could look at. I don't know. I think one sector which is sort of very, maybe, overvalued, like, could be some of, again, like the tech marketplaces which are listed. We've seen recently they've gone through some correction as well. But in terms of hold, I think, again, like banking is one sector I think you should definitely hold on to.
Okay.
And yeah, I think banking, and I think IT services. These two I would sort of definitely hold on to.
Hold on to. Okay. As you were talking about banking sector, so banks are underperforming, and this underperformance is also somewhere seen in the insurance and AMCs. So if the general stance on the Indian economy is positive, and if we expect the earnings to be supporting it, so what do you think is the reason for this relative underperformance?
Yeah, so banks, is very correlated to sort of the earnings growth. So as you know, earnings is related to sort of credit growth. So credit growth was close to 5% in April, and that's increased to about 7% in November. And banks were sort of affected by the second wave, which caught a lot of people off guard. So I think that's been one of the reasons for their sort of underperformance. And recently, there's also been some noise around the macro. So I think That's one reason they underperformed. Life insurance companies, again, they underperform because of a lot of claims related to the second wave. So you saw
Right.
huge payouts for SBI Life and Max Life and some of these other companies. And general life insurance, I think a lot of their business is driven by cars, motors, so like two-wheeler, four-wheeler, and even agriculture. So I think that sector has sort of been a little weak in the last 5-6 months. So I think that's why those companies haven't done so well. And as far as AMCs are concerned, I think a lot of their flows are sort of driven by flows into the MF products, and also they're sort of priced pretty richly. So I think that's sort of broadly the reason I would think why they've underperformed.
There was a time after the pandemics where there was a huge scope of re-rating in these PSU banks as they were at their lowest book values and so. So, do you think they are yet re-rating candidates or no?
No, they are definitely re-rating candidates. I mean, I think PSU banks, as a segment, have gone through a lot of consolidation in the last 8 to 10 years, and I think like certain 2-3 of them, I think, are definitely sort of viable candidates for sort of long-term re-rating as well. I think especially State Bank of India is definitely one sort of company that sort of looks promising from a long-term point of view. Um, and yeah, I mean, I think the price to book. I mean, the re-rating that happened in some of them, yeah, I mean, they were really beaten down way out of like their historical averages. So I think that re-rating has happened in some of them. But going forward, I think where again earnings growth is good and quality of earnings is good, that's where you'll see further re-rating.
Further re-rating, okay. Vaibhav, there's been this single most, what's been that single most important investing lesson that you've learned from Ramdev ji? And besides whom do you consider your biggest mentor or mentors in this investing genre?
So I think one of the biggest ones is I think he looks at things from a market cap to earnings point of view. So I mean the biggest sort of in industry parlance, what do you call multi-baggers? So those are typically made when you think that in the next 4 to 5 years the earnings, the total sum of earnings would be greater than the current market cap of the company.
Right.
So based on your assessment of the company's earnings next 4 5 years, you can see whether or not this stock would sort of at least give back its market cap. So that's when you're typically sitting on a company that can potentially be a multi-bagger. So that's one thing I've learned from him, and also the longevity of sort of the growth. Usually, like we get excited if a company has 50% earnings growth or 100% earnings growth in 1 year. But what's actually important is consistent, calibrated growth for a long period of time. Because that consistency and the longevity is what sort of brings about predictability, and then that's also what helps the stock to get a decent sort of valuation.
Right.
So these are two things I've learned from him. And in terms of other people, I think I've had the opportunity to interact with a lot of senior analysts and fund managers from the industry. So that's sort of been great learning, and I think that's an ongoing exercise. I mean that doesn't sort of stop today.
Right. Right. Also, Vaibhav, while going through your profile, I figured out that you've
Mishika, I think you're on mute again.
Hello, am I audible?
Yeah.
Yeah, I'm so sorry. There was some network glitch, I think. While going through your profile, I figured out that you've met Mr. Buffett also. So, how was your experience meeting him?
So I mean, I had actually met him when I was doing my undergrad in the US. There was a trip, like a group trip from 3-4 other colleges where sort of about 100 students get to meet him. So I think it was more. I think one thing that's remarkable about him is that despite, I mean, when I met him, he was about, I think, think 75 or 80 years old. I'm not sure. But
Right.
even then, his memory was so sharp. I mean, he remembers every transaction he's made like he's just done it yesterday. And just his energy and his enthusiasm towards investing. I mean, that obviously clearly comes out. So I think that's something that I mean, it was a short interaction of about an hour. Um, and I think also just his humility. I mean, while he's obviously one of the richest people in the world, he's just a regular guy as far as people in Omaha are concerned.
Oh wow, that's wonderful. That's
Yeah.
really commendable. Vaibhav, if you had to carry one book with you for the rest of your life, which one would it be?
So I think I would carry, Snowball, which is basically sort of an autobiography of Warren Buffett.
Yeah.
It's sort of a biography slash autobiography, but basically what happens is like most of the books that you read, like they'll tell you maybe like the investing. They'll tell you the investing theory, or they'll tell you a little bit about the person. But this is like literally his life in context. I mean, and so all like what I mean, all the big decisions he made in buying the companies he did. Like, what was the context sort of surrounding it? What was the thought process behind it? So in a detail, it sort of gives you his entire life history and the context of why he made the decisions that he made. And I think that's something that you don't sort of get to see in many other places. So, I mean, I think that's one book that sort of, I mean, it's basically the life of maybe one of the greatest investors of all time. So, and the context
Yeah.
behind what he did. So, I think that sort of transparency and detail you don't get into too many other people's lives. So, I think that's definitely something that was interesting.
Oh, superb. If what is your broad stock screening process for your flagship small case?
Yeah, so I think as I mentioned, so we look at there are two aspects to the portfolio strategy. One is the buying side, and one is the rebalancing side. So on the buying side, we look at companies broadly from two angles. One is from a from medium to long term perspective. That's about 80% of the portfolio, and about 20% of it is tactical bets, which is companies relevant from a 3 to 6 month perspective. Um, and uh,
Right.
and yeah, I mean, I think in the long term winners, we look at companies which have good earnings growth, good capital allocation, good ROEs, good corporate governance, and have good growth runway ahead of them for the next 15 to 18 months. And in tactical bets, we look at sort of specific opportunities that might be relevant from a 3 to 6 month perspective.
Right. That's really cool, Vaibhav. And what is the key exit criteria that you use? Like buying is very easy, but deciding when to sell is very difficult. So what do you do for that?
So I think there are broadly three, four broad buckets. So one is that when the thesis with which you invested that plays out. Second could be that the risk reward in some other stock or sector is significantly better than what we are currently holding. Third could be that there's a lot of negative noise, or there's some capital misallocation, or there's some change in competitive scenario. At that point, we may choose to exit a stock. And fourth is if there is a negative externality globally, which is out of our control, and we can't do anything about it. Then at that point, we may choose to exit as well. So that's broadly how we look at it.
Oh, okay. Vaibhav, what is that one stock idea from your favorite small case strategy, and what is your broad thesis around its selection?
So I think I sort of one stock that I like is ICICI Securities. So this is one company that's in literally the entire spectrum of at least stockbroking. So they've been a full service broker, but they also have offerings for young millennials, in the discount broking space as well. And
Right.
this is a company which has a very rich history of sort of high ROE, like 20-25% earnings growth over 4 5 years. And they're the largest mutual fund distributors. They're one of the largest, wealth management companies as well. They also are a stellar sort of iBank. So I think it's a very broad play on the Indian capital markets. and they also have the advantage of being part of a large bank, both in terms of
Right.
the customer leads that it gives them, and also in terms of the trust and visibility that it sort of offers. So I think, and again, the companies with the kind of return earnings profile that it has, the kind of growth it has, and its valuations are sort of, I think, quite reasonable. I mean, some people might say that it's a cyclical stock, so that's why it should have low valuation. But I think now their model also has more annuity aspects to it, so it may not just be a cyclical company. I mean, it may sort of have more secular earnings growth. So I think it could sort of re-rate from here.
Oh, thank you, Weber, for sharing that one particular favorite stock of yours. So, Weber, how do you see the future opportunities related to your investing strategy in the current market scenario?
So when you say the relevance of it, you mean like how will this investing strategy do in the future?
Yeah, right.
Yeah. So I think as I've said, like so broadly, we look at companies that have a relevance from a 15 to 18 month perspective. And I mean, we keep monitoring those trends. So we keep seeing how those companies are doing. So it's a open architecture sort of strategy, right? We don't have any sector bias or any top down specific thing that might sort of limit us from anything. So I think broadly it sort of has all the checks and balances in place. So I think it should be fine from a long term perspective also. And even if things supposing go wrong at a macroeconomic level or at a company specific level, we have those sort of checks and balances to exit as well. So I think all in all, we are sort of balanced well.
That's really very important. Like when you say that, having those necessary checks and balances to alter your strategy or to, change it with the current market scenario, having those checks and balances, I think, makes all of the difference. So I think, Weber, if we are not out of time, we can take some questions from the audience right now.
Yes, please. Absolutely.
Yeah, sure. Guys, you can send requests. I'm accepting your requests. And please, only those of you who have questions from Webov can come up and ask. Ankit, you can go ahead.
Yeah, Ankit, I think you're on mute. Maybe.
Yeah.
Yeah, I
Hi.
think he's on mute right now.
Yeah, hi. Thanks for the opportunity. Yeah, hi, Vaibhav. I never
Yeah.
used, although, this Teji Mandi app, but I would like to know how you are helping out the retail investor to get the knowledge and make profits by doing trading by using this app. Basically, I want to know how you are helping out by this help to the retail investor. And the second question is there any kind of warning or alert kind of things which you are giving to the retail investors so they are not losing money?
Yeah. Hi. Thanks for the question, Ankit. So basically, see, we are currently present on two platforms. One is obviously the Teji Mandi app, and one is Small Case. And thanks to Small Case, I think we are all sort of gathered today together. What I mean, the basic point is that we what we do is in terms of investor education, we have a daily feature article that does a deep dive on a specific topic or a specific sector. And over the weekend, we also sort of highlight one or two companies that might be sort of relevant for people to look at. But that is mostly the free education content. I think what is really important is that we are offering portfolio advisory at a really affordable price point, where we professionally sort of manage your money. So a lot of aspects, I think, a lot of retail investors, though they want to be DIY and they want to do everything themselves, it may not necessarily be the best strategy, especially when you're investing in ETFs or you're doing something else. It's more straightforward. But when you're actively managing your own money, it's not necessarily as straightforward. So I think do that professional sort of advisory for you. Like typically, what you would get in PMS products, for 50 lakhs and above AUM, we're doing it at for significantly lower sort of investment amounts. And we also sort of give you the rationale behind why we're doing what we're doing. And we have two portfolios. One is flagship, which is the multi-cap portfolio, and one is the multiplier, which is the mid and small cap portfolio. And both of these are sort of available on small case as well. So yeah, that's broadly sort of what we're offering.
One more question, if may I proceed?
Yeah, please.
Yeah, so there are lots of PMS services in the market right now, and there are lots of app which are providing investor education kind of services. So apart from doing commercial services, are you also providing investor education kind of things?
Yeah, so I mean, so how do I explain it? I mean, we're so some of the stuff maybe like that some of the companies are doing in terms of like explaining to you the concepts of investing, like or explaining to you how to make a how to make a financial model. We don't do that. We just sort of broadly explain to you maybe what's happening in the market or a specific stock or sector that's relevant, and we also sort of manage money on your behalf, right? So I think for a lot of people, PMS is simply not accessible because it's an asset class, accessible more to the HNIs and the ultra HNIs. So for the mass retail investor, we are sort of providing high quality portfolio advisory. So yeah, that's how we sort of do it.
Thank you for your question, Ankit. I think we can move on to another speaker, that is philosophy. I think he's on mute. We can go forward to Prashant.
Yeah, am I audible?
Yes,
Yeah.
you're audible.
Yes. Good evening to everybody. Good evening, Mr. Weber.
Yeah.
Yeah, I want to ask whether what is the impact of studying macroeconomic data as far as quantitative easing and taper tantrum is concerned is being put on news and stories by all federal banks, central banks. So do we really require such short term concepts if you are going for a 3 to 5 years portfolio?
See, I mean, the only thing is you have to be alert and you should just know what is happening. It may not necessarily affect the companies that you're buying sort of very directly. I mean, the impact is more at a macro level where maybe like the markets could maybe correct in the near term, or it could mean that if interest rates globally are sort of going up, then like we've seen the rupee, for example, like it's sort of getting devalued against the dollar, and also so some of those dynamics are what you have to sort of watch out for. But what it does is because it sort of causes some near term correction, it also allows you to enter into some stocks or some sectors at a better price point. So I think from that perspective, I think you should sort of look out for that.
Thank you, sir. Thank you.
Thank you so much, Prashant.
Can I go
Yes, go ahead.
Yeah, good evening, Weber. I have a question regarding the upcoming time in the market. Can you please educate us on the broader aspects of the market in the coming year and the sectors which one can focus on?
Right. So yeah, thanks for your question. So I think going forward, at least what we believe is that India is sort of coming out of a down cycle and entering into a structural upcycle after almost 10 to 12 years. And the reasons for that are manifold. I mean, if you see, we are starting with low interest rates. A lot of companies have sort of cleaned up their balance sheet, so their ability to take on debt is very high. Corporate profits to GDP are sort of at a historical low as well. And there are several other indicators that sort of indicate that India, a lot of companies have also shown their interest that they want to invest in capex. Even government has sort of brought forth. So it looks like circumstances, while history doesn't repeat, it sort of rhymes. So if we look at sort of 2003 to now, I think it looks like some of the circumstances are similar to that. So we may be entering, a structural upcycle. So, and if that's happening, then corporate profit earnings in the next 4 to 5 years should be meaningfully higher than what they were in the last 4 to 5 years. And markets typically follow corporate earnings over a long period of time. So, given that outlook, I think markets should broadly remain strong in the times to come.
Bengal, I think we can proceed to him. I think he's on mute, right?
Yeah. Vaibhav,
Yeah.
I wanted to ask two questions. One is like you have two products. One is a 2020 product kind of a mixture wherein every Saturday you actually send the intimation if you require a switch or not. Another one is a multi-cap and a small cap product. Out of the two products, which product, if you were supposed to choose, which product would you have chosen?
See, I think the reasons for both the products are very different. So if you look at our multi-cap product, that is meant more, if you want sort of a all-weather sort of a portfolio that sort of gives you consistent, calibrated sort of returns over a period of time, then I think that's the portfolio to go. I mean, that has a mix of it's like an Indian thali, right? So it has all the ingredients. I mean, it's a holistic sort of a portfolio.
Okay.
And the mid cap, small cap one is meant more if you're looking at companies that can grow more quickly or grow more exponentially, and sort of take advantage of the upcycle we are in. Obviously, now when you invest in mid caps and small caps, they inherently come with higher volatility and in some cases with higher risk also. So to that extent, I think that's what that product offers. So I think it really depends on what you're looking to do.
Right. I think we can move on to Meet. Meet, you can ask your question.
Hey Vaibhav, nice hearing you for the first time. Appreciate your thought clarity. Just wanted to ask
Thanks.
two questions. How many businesses you have in your small case portfolio, and what is the typical allocation in your top 10 stocks?
Right. So in the flagship, we have at any point in time we have anywhere between 15 to 18 stocks. That depends on what time it is. There's no fixed number, but broadly a range that we have. And in terms of the top 10 stocks, so we have broadly two allocations. We either allocate 7% or we allocate 5%. So in terms of usually no stock is sort of more than 7% allocation. So and it ranges anywhere between both those allocations. So I think that's broadly how it is. So I think the distribution is relatively holistic. So there is no sort of specific concentration risk.
Thanks a lot. Thanks for the clarity.
Thanks.
We can move on forward to Keshav. Keshav, you can ask your question.
Yeah, hi Keshav. I think are you on mute?
I think yes, he's on mute. Till then, I think we have also Vimal here. I just accepted his request.
Yep.
So,
Vaibhav sir,
please.
Vaibhav sir, I would like to know how you decide the sector allocation.
I mean, it obviously depends on two things. One is like what is the growth outlook of the sector, in which maybe what part of the cycle it is in, and also, I mean, are there any risks at a macro level? And it's also bottom up. I mean, we don't sort of specifically decide that this sector will have so much allocation. It's more broadly the stock specific opportunities that are there, and so we do a combination of those two, and then sort of it's more an outcome rather than sort of something that we actively sort of try to do.
right. I've just approved Keshav's request as he requested again. So, Keshav, yeah, we can have your question.
Thank you, Vaibhav, for such a lovely session. I have a
Thanks.
question here कि as a beginner अगर हम बात करें या as an intermediate भी बात करें या जो person even market में बहुत experienced भी है we always think about like as the topic states, the market outlook for the 2022. But is it really मतलब अगर मैं इसके अंदर थोड़ा डीप अगर मैं डिग इन करूं तो क्या सेक्टर रोटेशन दैट वी टॉक अबाउट कि वी जनरली एक होता है कि मार्केट का आउटलुक वी आर टॉकिंग अबाउट कि दैट वी आर बुलिश, वी आर बेरिश, और वी आर हैविंग अ न्यूट्रल व्यू फॉर द मार्केट, बट इज इट रियली पॉसिबल कि talking about the various sectors, because every time, every year, or every set of years, maybe 2 years, 3 years का जो भी market चलता है, तो every time there are a few specific sectors which are actually outperforming the overall market, and there are few sectors even in the bearish market, some sectors are actually outperforming. So what will be your take here, like during the next upcoming, not only 2022 but for the upcoming 2 years, 3 years down the road? So what will be the specific sectors which might be outperforming the overall, the general market, like Nifty, Bank Nifty?
Right. So I think you mentioned Nifty and Bank Nifty. So I think specifically in the next few years, banking is going to be a big composition of the earnings growth in the index. I'm also quite bullish on and within banks specifically, like some large private sector banks. Then within then I think IT is also going to be a big part of the earnings growth and earnings profit pool. And I think the sort of demand upcycle we are seeing right now, it's sort of similar to what we had seen in the early 2000s. So I mean, this is one sector which has really very good quality free cash flow and sort of very good growth ahead for the next few years. So, and also with sort of the macro risk where rupee might be devaluing, sort of. I mean, it is as a possibility. Not, I mean, we don't know if it will happen, but it is the way things are looking right now. So then, in that sort of situation, IT sort of tends to do well. And yeah, I mean, I think even as you said, as you asked about the market outlook, our approach to the market is much more sort of bottom up rather than top down. So we don't have any specific like Nifty level or anything like that. We broadly just look at the direction in which sort of things are going based on various data points, and then we take a call.
Thank you, Vaibhav, and thank you, Mishika.
Thank you. We can have the last question from Accidental Investor.
Hello, am I audible?
Yeah, hi.
Yeah, thanks for allowing. Vaibhav, I wanted to ask, like, if I'm not mistaken, you started the firm in last year, October 2020, right? So,
Right.
last 1 year has been kind to everyone. So, starting from, I mean, looking from here down the line for 3-5 years down the line, what would be the roadmap from Tezi Mandi team?
So for the roadmap for
AI, you were not audible. I think he just wanted to ask what would be the roadmap for the Tezi Mandi team.
I mean, I think there's no specific. I mean, in terms of roadmap, I think we have 2 portfolios that we're sort of offering right now. And the idea is that I mean, we started these portfolios while publicly it was started in October 2020. We started much before that in March actually. We started actually when the pandemic started hitting India. So we've seen the entire down cycle and then the subsequent up cycle from it. So in that sense, I think what typically happens in 5 years happened in a period of 6 months, at least in 2020. So from that angle, I think we've offered 2 products. I think these products should be relevant for the next 3-5 years as well. I don't think that we need to offer too many more products, especially on the equity side. And I think if you're asking in terms of what the performance roadmap is, I mean, I obviously can't sort of. I can only prepare for it. I cannot sort of tell you what outcome it'll be. We'll get, but broadly the idea is that we're looking at Nifty has given, I think, over the last 30 years like compounded annual growth rate of 12 to 13%. So our idea would be that if on a calibrated basis, if we can get anywhere between 18 to 20%, I think we'll sort of be happy.
Okay. Thank you, AI. Thank you, Vaibhav.
Yeah, thanks a lot, Mishika.
Well, it was great interacting with you, Vaibhav. Thanks for sharing your insights on markets.
Yeah,
And
thanks.
we hope to have a part 2 of this conversation very soon.
Yeah,
And I really appreciate your time on behalf of all of us. Wish you and your team a very wonderful 2022.
great. Thank you so much.
Thank you, Vaibhav, and thank you all of you for catching us live on Twitter Spaces. Have a great holiday and wish all of you a very happy new year.